Welcome to S&P's European loan market video overview detailing leveraged finance trends and activity during February 2013. I'm Suchit Gupte, a member of S&P Capital IQ's Leverage Commentary and Data team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in March and early April 2013. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the over 10,000 contacts in LCD's Leveraged Loan group on LinkedIn, as well as leveragedloan.com and highyieldbond.com, free websites promoting leveraged loan and high-yield asset classes. On it, you'll find recent market stats, news and analysis, and leveraged finance job postings, and online primers that explain key market terms. The links to our websites and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. Loan issuance was 3.03 billion euros in February 2013, while high-yield bond issuance was 7.4 billion euros. According to JP Morgan High Yield Research, estimated outflows out of European high-yield funds was around 220 million for the 4 weeks ending February 28th. Investors are starting to get skittish about where to deploy their cash. Secondary markets are up. Loan markets were up 5 basis points to finish the month at 99.47, while high-yield markets were up 19 bips to finish the month at 102.3. The S&P European Leveraged Loan Index, the LE, finished the month up 0.4%, positive. Default rates were mixed, as default rates by principal amount rose, while the default rate by issuer count fell. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Secondary loan prices rose 5 basis points to finish the month at 99.47. This next chart details the average price of LCD's European High Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. The high-yield market finished the month up 19 bips at 102.83. This chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market had a positive return of 0.4% for the month of February 2013, down from the 1.18% seen in January 2013. This brings the year-to-date return to 1.59% versus 3.34% for the same period last year. Now we turn from the secondary market to the primary market. This graph details new issue volume for both leveraged loans and high-yield bonds. February's loan new issuance was just 3.03 billion euros, which is roughly on par with January's 3.2 billion euros. This excludes the 4.5 billion refinancing for German tire manufacturer Continental. Term Loan B issuance, which represents supply for institutional investors, stood at 2.3 billion euros in February. Little change from the prior month and far below the double-digit figure seen during the market heyday of 2006 and 2007. While these volume figures are low by historic standards, as confidence returned to the European leveraged finance space, so too has the appetite for larger transactions, including larger buyouts. The success of Virgin Media's M&A financing in February demonstrates the relative ease with large amounts can be raised from the market, providing the borrower is right and all pockets of liquidity are tapped. By contrast, the high-yield bond market had a supercharged start to the year, generating 14.5 billion euros of paper through February 28th, for the strongest 2-month start to any year on record since LCD started tracking this data in 2006. In February 2013, new issue volume reached 7.4 billion euros, up slightly from 7.1 billion euros in January for the third highest monthly reading on record, and 1 billion short of the all-time high set in March 2011. European borrowers continue to use the hot high-yield bond market to manage their bank debt maturities, raising 4 billion in January and February alone to refinance outstanding credits. Similar to last year, roughly half of new issuance so far in 2013, totaling 7 billion euros or 48% of total volume, went towards refinancings, regardless of the type of debt taken out. The default rate by principal amount rose to 6.2% at the end of February 2013, up from 6.1% seen in January 2013. The default rate by issuer count fell to 7.2% at the end of February 2013 from 7.7% seen in January 2013. Themes to watch for going forward. Repricings are back on the table as issuers take advantage of strong demand from investors, though there has been pushback from investors on the final terms. There were 4 repricings in February: Iceland Foods, Wood Mackenzie, Global Blue, and Schaeffler. While the latter issuer benefited from cross-border syndication, the other 3 did not, making February's tally the highest number of purely European repricings in any month on record. Along with repricing, some sponsors are tabling dividend recap deals to take advantage of strong investor demand. There's still strong demand for high-yield bonds, even with the outflows from European high-yield funds. Bond for loans takeouts will continue to keep pace as issuers address their maturity concerns. And Cairn Management priced its 300.5 million European CLO. It's the first new arbitrage CLO in Europe since the crisis began in 2007. And there are signs/whisperings that other managers are also talking about pricing new CLOs, new vehicles. This would be a much-needed boost to the European leveraged loan market. And there is renewed optimism about M&A, both for sponsor M&A as well as the broader M&A market. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for the other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.